Hey everybody, this is Warren Barhorst. I'm the CEO of Iscential. We're a risk management insurance, financial service, and consulting firm out of Houston, Texas. Just sharing a little bit about what's going on with insurance rates. Predominantly what's happening right now because of the number of catastrophes that we've had in the marketplace over the last decade of years is insurance carriers are increasing their prices to keep up with the losses that they're paying. The second contributing factor is that the cost to rebuild things because of inflation and the supply chain issues created by COVID-19 are causing reconstruction costs to go through the roof. I want to talk right now about what it looks like from an insurance carrier's perspective. So if you think about it, insurance companies take a little bit of money from each person. So let's just say your insurance bill is $1,000 or $2,000 a year for your homeowner's policy. They put that money in a savings account with everybody else's money that's paid $1,000 or $2,000 for their insurance policy. And then a few people turn in claims and they are able to pay the large hundreds of thousands of dollar claims because they've got thousands of people giving them $1,000 a year insurance premiums. Basically, the law of large numbers is how insurance works. Well, if you put money in that pot or that savings account, reserve account as insurance carriers call it, and they end up paying out more money than they collected in, they have to increase their rates to keep that pot of money available to pay the next person's claim. So that's in general what's going on. Everyone in the marketplace is taking rate because everyone's experiencing the same losses. In 2020, we had Winter Storm Uri, billions and billions of dollars of losses. And if you just kind of look at the forest fires and all the different things that's going on around the country, there's really no safe place to collect insurance premium and not have claims. So that's what's driving the rates, and you can expect to see them go up more and more and more over time. It is an interesting paradigm. I've been doing this for 30 years, and people expect their car insurance price to go down every year. They expect their homeowner's insurance price to be less or the same each year. And the reality is it just doesn't work that way. If you think about it, from a car insurance perspective, the guy repairing your car at the body shop, he wants to make more money, so he got a raise. The truck driver who delivered the parts got a raise. Right now, gasoline prices are through the roof, so the cost to move the fender or the bumper or the part that's being shipped to the body shop got more expensive. Everything in the supply chain, everybody working in the supply chain, working on the car, is wanting more money. So it only makes sense that it would cost more money to fix your car. So you couple that with the idea that lawsuits are on the increase, so more people are winning money from lawsuits, more cars are costing more money to repair. It's time to raise your rate on your car because we just can't collect enough money in that reserve bucket of money to pay out all the claims that we have. Same thing happens on the homeowner's insurance side. You collect money from individual people, you set it aside, and then when they go to rebuild the house, the contractor used to get $100 a square foot to build a house. Then the price went to $200 a square foot. Then it went to $300 a square foot, $400, $500. And today it's actually hard to find a contractor to do the work. So when there's limited numbers of contractors, contractors rather build a new house than work on a burnt down house, right? A burnt down house, you have to clean up all the old stuff. You've got emotion involved because the person's family was in that house and they've lost all their personal belongings and they want the house back the way they had it before, it's emotional to build a new house also, but people aren't tied to it yet. So there's a little different feeling when it goes putting back. So contractors in times of new construction are good, which they are right now. They can choose to work on new projects versus working on your rebuild projects. So less people to do the work, higher prices to get the work done.